So we see and we hear a lot of global prophecy. There's a lot of bad prophecy about economics, global economics around the world. We see the interest rate hikes and then the challenging state of inflation. There's a lot of dark economic clouds everywhere in the news. What do you think the potential impact that could bring to emerging markets, including the Southeast Asia region and Indonesia?
Well, a couple of lights at the end of the tunnel that we should be paying more attention to instead of focusing just on the negative news. One is that the developed markets, central banks led by the Fed, now is moving towards peaking interest rate hike policy. So that means the tightening mode of major central banks is now coming to an end. And some players are even forecasting there might be rate cuts by the major central banks later this year. Some are saying that at least if there's no rate cuts, then at least there will be no more rate hikes. So that's, I think, one positive. The other one is China's reopening, recovery of the Chinese economy. Now, China is the second largest economy in the world. Yeah. When it recovers, it will have spillover effect, positive spillover effect, definitely on the Asia region, but also on the other parts of the world, commodity markets and so on. Now, we are not expecting a very robust Chinese recovery. We are expecting a moderate recovery, so that the Chinese positive impact on global economy, on regional economy will still be there, but it's not going to be very, very big. So we're looking at moderate spillover effect from China to help the global economy.
That's nice that you're not only focusing on the bad news, but on the bright side, there are no rate cuts expectation, and then the reopening of China policy, zero COVID policy. But in terms of the impact of China reopening policy for the global economics, there's a lot of worry as well. The reopening will have shifting the directions for the global monetary policy, that this reopening could create risk of higher inflation, where all the markets has expecting the Fed will be less hawkish this semester, but then again, the reopening could hinder the inflation rate to come into some certain level that they expected. What do you think about it?
I think that worried about China's recovery boosting global inflation, which in turn could prompt the Fed or the ECB hike rates again. I think that fear is overblown.
Overblown?
Yes, because when you look at China's recovery, as I said earlier, we don't expect a very robust recovery. We are looking at a moderate recovery. And within this moderate recovery, supply in China is going to increase, because manufacturing capacity utilization in China went down in the past 2 years because of lockdowns and things like that. And now the economy is being reopened. So they're going to increase manufacturing capacity, which means the supply is going to increase. So that will put a cap on inflationary pressure in China. And on the demand side, Chinese consumer, the consumption recovery is also expected to be moderate. Unlike consumer in the US who have been boosted their spending because there's a significant amount of fiscal transfer from the US government to the consumer. But in China, we don't see that. I mean, Beijing hasn't really done any fiscal transfer to the consumer. So the consumer recovery in China is going to be moderate. So when you put all these two together, we have supply increase in China during the recovery, and then constrained demand. So Chinese inflation is not going to be going through the roof. So we are expecting at the peak, Chinese inflation will go back to about 3% from currently less than 2%. Now, when you look at that inflation rate in China, compare that with the developed markets, China's inflation rate is significantly lower than what we see in Europe, in the UK, in America. So with lower inflation in China, how can it export inflation to the other parts of the world? And also because the fact that with China's reopening, the supply chain distortion is not going to be hurting anymore. So that would also help improve global supply chain and supply as well, so that the inflationary impact from China's reopening, I don't think is going to be a major factor in affecting our central bank's policy.
So safe to say that worry is overblown, sir?
I believe so.
You believe so. And you mentioned about China reopening policy, even though it's reopening the economy and there's a lot of hope for China. But you said previously that this opening is not that robust. Right. So you see a lot of people, a lot of markets are, looking the global directions. There's a lot of gloom. But then again, we're trying to find out the savior for this global economic recession. So you see China is going to help by this reopening, but what is actually the sentiment of the savior for this global economic recession prophecy in this very year?
My message is mainly that we have to be realistic about China's reopening, recovery, helping the global economy. It will. But the point here is that when you look at the Chinese economy, it's the second largest in the world, right? So this economy is recovering, but then on the other side of the world, we have developed markets led by Europe and the US moving into a recession. It could be a shallow recession. This is what the market is now trying to figure out. Nevertheless, we are seeing developed markets slowing down quite sharply. When you look at the size of the economies of the G2, the US and Europe, they are together 1.6 times the Chinese economy. So the logic is very simple here, that when you have recovery in the Chinese economy, which is smaller than the combined economic size of US and Europe, not to mention the whole of developed markets, of course the positive impact from China on global economy is not going to overwhelm the recessionary impact of the developed markets. So that's why we think that the Chinese help to the world economy, also to the regional economy, is there. But we have to be realistic that China cannot save the world. It can help. It can help,
but that is going to be the savior of the global economic recession.
Not this time, unfortunately. And that's why I think with the China recovery, there has been recently improvement in forecasts for growth this year and also next year.
Okay. Still on the reopening of China, what do you think about the commodity prices outlook as China reopen its economy? Commodity prices?
Well, we think the commodity market will benefit somehow from China's reopening, but I don't think we can look at the commodity market from the China recovery perspective in just one big aggregate. We have to break it up because the Chinese impact on commodities is uneven. I believe within the commodity space, oil will benefit more than other commodity output from Chinese recovery. The reason is very simple. When China reopens, recovers, Chinese tourists are going to come out. So in the coming months, we're expecting there will be a significant amount of Chinese tourists, going out to other parts of the world, holidays and so on. So that will increase the demand for flights, trains and all that. They all use oil so far. So that's why the Chinese demand impact on oil, I think, is going to be more material than the Chinese demand for other commodity types. Other commodity types like, for example, iron ore, steel, cement. Now, they will benefit from China's recovery, but not significantly so, because when you look at China's government policy, Beijing is now de-emphasizing the property market and construction in the Chinese economy, which means that the traditional demand for commodities like iron ore, copper and so on from these two big sectors in China is not going to be that strong. And that's why, relatively speaking, I think within the commodity space, I think we see better outlook for oil than the other commodity products.
Right, that's for the community and the impact of China's reopening. But you cannot see it only from the China's reopening side, but you have to look aggregately, right? Sir? Now we're moving on to the global economic situation. You mentioned before that the China's reopening could only help, but not significantly could be a savior, comparing to what happened in the developed markets, just like the US, Europe, and so on. What the world can expect for the US and Europe or anything that could happen this 2023, and what are the things that could actually be the bright side of the tunnel of this global economic doom?
We need the developed markets led by the big economies to come out of recession quickly. And I think consensus now is to look at, to see shallow recessions in the US and Europe and so on. And the recent performance of the European economies are better than expectation. So that increases the market sentiment towards looking at the positive side. That once when the shallow recession is over, sometime by the time of second quarter, third quarter this year, then we are hopeful that we get the global economy, especially the developed market side, coming back out of the economic doldrums that will add on to the Chinese recovery, and then the global economy can get back on its feet later this year into next year.